Some big news just hit this week. There is a brand new credit report model that's going to be able to be used to give you potentially better credit scores or better results on your credit score for conventional loans. That's the super, super good news. Here's the bad news. It kind of putting the cart before the horse. So we have a situation where this week a tweet, not called tweets anymore, they're called X's, I don't know. Anyway, Bill Pulte, the head of the Federal Housing Finance Administration that oversees Fannie Mae and Freddie Mac, they run all conventional loans. And he sent out a tweet saying, effective immediately, Fannie Mae and Freddie Mac are going to accept Vantage credit scores in addition to FICO scores, which is great news because Vantage uses a different model and there's some benefits to it. I'll talk about those benefits in just a minute. But let's be really clear on what this is going to mean. So first of all, what changes today? Nothing, absolutely nothing. Why? Because the credit scoring process starts from the bottom up. It starts with lenders and our relationship with vendors in getting your credit score into the system. We have to now work with those vendors to be able to get the Vantage credit score into the system. These systems have been built for a long time and they only allow 3 credit scores to be imported. So there may be some major technological restructuring that has to be done in order to get these new credit scores into the system. Secondly, there's going to be some time for things to be worked out, like, well, what happens with mortgage insurance companies? Are they going to use the new credit scoring system or are they going to require us to pull the old one? Does that mean we have to pull both, which, by the way, can significantly increase the cost of credit? And the whole point here was to give competition so that the cost of credit can come down. So let me give you some quick backstory. Credit report costs have skyrocketed significantly over the last decade. We went from probably $15 per person per credit report to over $100 on average, closer to $150 in a lot of cases for credit reports per person on a mortgage. The fees have skyrocketed and everybody is saying, oh my gosh, we need to find a way to fix this. I agree we need to find a way to fix it. But changing from FICO to Vantage and having competition between those two is not going to drive down the cost because FICO is only charging $5 per credit bureau per credit report. So you're paying $15 to the FICO system. That is a small portion of the $100+ that we are spending. And so if that number got driven down in half, that only saves you $7.50 per credit report. So that's not going to be a very, very big savings. And currently, what I've read is the Vantage scoring model, they charge exactly the same thing. Matter of fact, there's a little bit of concern because the actual owners of the Vantage model is Equifax, TransUnion, and Experian. So FICO is a separate company, but the Vantage model is owned by the 3 credit bureaus. So it's really becoming less of competition, more of, okay, well, the monopoly that already is the biggest problem in this space, the biggest fee, the biggest part of the cost of your credit report is the actual cost of the pull from Equifax, Experian, and TransUnion. And now we've decided we're going to use a score, the only part that those 3 companies don't control, and we're going to pull a score from a company that is wholly owned by those 3 companies. So this isn't creating more competition, okay? There was a argument, actually a proposal, a process put in place by the Biden administration. You guys know I never get political. I don't care who you follow. I'm not going to tell you who I follow. I'm just telling you factually. The Biden administration said we're going to decrease from a tri-merge, 3 credit reports, to a bi-merge, 2 credit reports. So now you have Equifax, Experian, and TransUnion competing against one another because if one of them is higher priced, everybody is going to go with the other 2. Now, it requires somebody to light the fire into the price war. That's a price war. It's just like airlines, right? Airline tickets only start to fall when one company starts to lower prices. Then it becomes a price war. Otherwise, if everybody keeps prices artificially high, there's no need for a war. So we don't really have a simple solution to lower the cost of credit. This is not going to save you money. It might start saving you money next year because technically new contracts are revised or rewritten every year between FICO and the credit bureaus and Vantage and the credit bureaus. And so technically now that there's going to be competition. We might get a little bit lower cost, but again, we're talking about $5 per credit bureau for each of those scores. That's not going to be a significant cost savings. Here's where it will likely help you. The Vantage system is more forgiving in a lot of ways. So it's the Vantage 4.0 is what we're talking about here. And so the Vantage algorithms are newer. So the Vantage 4.0 was released in 2017 versus the algorithms, the scoring model that we're using, even though FICO has more recent versions, the like 10T, I think is their current version, the mortgage industry doesn't use that. The mortgage industry uses the classic scores, which were created in the early 2000s, and we've never updated since then. So those scores, for example, on a FICO score, you have to have a credit history of at least 6 months, and you have to have at least one account updating on your credit report within the last 6 months. So if you have no credit, it takes you 6 months of having an account in order to even have a score under the current FICO model system we use. The Vantage system allows for a credit score to be created 1 month after having an account. So just 1 month of history, and it will be able to give you a score. It uses machine learning logic to fill the gap. So it basically says, well, based on what we're seeing and based on the, 37 million consumers that it's analyzed, that they are going to be able to extrapolate a credit score with just one account open for 1 month. That's a huge win once this really starts getting implemented. Okay, so that's a big one. Collections are a big one. So the FICO system does not give you the benefit of paying off collections. Like a paid collection still hurts you. A little bit better than an unpaid one, but not a whole lot. The Vantage system ignores paid collections. Once you pay your collection, your score goes up. It ignores that. That's a huge difference, a very, very big difference. Okay. Another thing, just in my basic investigation I've done, the Vantage scoring system typically skews towards higher credit scores. So you're going to potentially get a higher score on the Vantage 4.0 than you are on the classic FICO system. Here's a negative. One of the negatives to the new Vantage system is how long it considers a shopping window for the purpose of doing multiple inquiries on a mortgage. The thinking behind this is when you are applying for a mortgage, the FICO system says, well, you're not applying for, you have 3 credit pulls from 3 mortgage companies. You're not applying for 3 mortgages. You're talking to 3 different companies about what your qualifications are, and that's not abnormal. So the FICO system allows for 45 days. You can have up to 3 credit bureau pulls from a mortgage company, from 3 different mortgage companies in a month and a half. And they all count as one, so it doesn't ding you as an extra inquiry on your credit report. The Vantage system, you have 2 weeks. You have 14 days. So once you do your first credit pull, if you're going to have anybody else pull another credit, you want to get it done in the first 14 days, because if you go beyond that, it dings you again on your credit as if it was a new inquiry. Now, to dive a little deeper on that, when I say it dings you again, it'll show up, all 3, if you're using the FICO system or the Vantage system, all of the inquiries will show up. But the scoring model ignores the additional inquiries within the same shopping period and treat them all as if they were one for the purpose of how it looks at the credit. Okay, so we have a lot of work to do before we actually get to implement this. We've got to figure out, like Fannie Mae and Freddie Mac have something called loan level price adjusters that say, hey, based upon the risk of your loan, we are going to charge this much extra in fee because you have lower credit or a smaller down payment. And there's a whole chart. Well, the question is, are they going to change that chart to say, hey, here's the chart if you're using FICO and here's the chart if you're using Vantage? Because the same person with the same credit history is going to probably have a better score on average. Matter of fact, one of the things I was reading says that FICO not only gives fewer high scores, but it's also much more punitive at the lower end. That punishes people at the lower end of the credit score even more. So generally speaking, it appears the Vantage system is going to give higher scores across the board. Well, the mortgage industry is worried that, hey, we got the same buyer. That same buyer has the same likelihood of repaying their mortgage. Our risk didn't change, but the number did. The number changed that we are using to determine the risk. And so the chances that we're going to say, oh, well, no big deal, has 2 hurdles to overcome. The first one is Fannie Mae and Freddie Mac saying, oh yeah, no, we'll apply the same loan adjustments, risk adjustments, and yeah, they're gonna get a better deal because they have better credit. That's potentially an outcome. They also could say, nope, we're gonna make two separate charts. Worst case, they make one chart that is harsher, that applies to everything, which would hurt everybody even more. But here's the second hurdle. The second hurdle is Wall Street. Mortgages are pooled together into a bond, they're called securities. And so they're going to be sold to Wall Street. Wall Street values those bonds, and they say, oh, I know that I can invest in a mortgage, and here's the risk in it, and this is the return I want to get. But if they have less confidence in the risk versus return, they're going to want higher rates. They're going to want higher income. And so Wall Street could be the final problem here, and saying, sure, the federal government says that we can allow these new credit scores, but you guys haven't taken any time to think through this or analyze it or give us data. And so we're just going to not buy those that use the Vantage credit score until we have more information. So this is good news long term. Short term, it is not as great as what you hope it will be. It's not as simple as what you think it's going to be. If you've seen your Vantage credit score, you're like, oh my gosh, that's great, I'm now going to qualify. The system is not designed to include it yet. So we've got from the top, they said include it, but nobody anywhere along the process has actually worked on including this. It's going to take some time. It is a win, and I will keep you updated, but right now, it's just news. It's not factual information that we can use, and so maintain your credit based upon what the FICO system looks at. Recognize that FICO is likely to always be one of the fallback positions, and recognize cost is not going to go down. Cost was potentially more likely to go down when we were looking at using two credit scores. The Trump administration has made it clear we're not switching to two credit scores. We're switching to two different scoring models, but you're still going to require 3 credit scores, which means we might have to pull 6 credit reports or 6 bureaus, 3 for FICO, 3 for Vantage. That could double the cost of your credit, not cut the cost of your credit, especially in the short term. So this is really, really good news long term, could be super, super challenging short term. If you have questions, feel free to reach out to me directly. I'm looking forward to being here to help guide you through this and any of your mortgage needs as we go forward. And thank you so much for joining me, and have a wonderful day. Bye-bye.